Gordo, where are we going this week? Well, let's check out this news article. Delayed U.S. employment. CPI reports are due this week with many gaps. We saw last week we were going to get more inflation thanks to the 10-year yield. Next up, we have Williams says Fed policy in good position, sees inflation moderation in 2026. I'm thinking inflation is going up, not down to 2% that the Fed has always been trying to aim for, like they said in the last meeting. Let's go check out the chart. As you guys know, or if you don't know, if you're new here, welcome. This is the 2-year yield, what the Fed follows. It's not the inflation chart. This is just for rates. The Fed is this orange line over here, and they have to follow this action here of the yield percent as close as possible. But they can't let the price or percent of the yield go above them. Otherwise, they have to hike the rates. Fed is above right now, which is why we're getting rate cuts. And if this price action breaks out of this pattern here to the upside, most likely we're going to have a rate hike. When will that be? Well, I don't know. Hasn't done anything. It's still in that pattern. Following up, we have the 10-year yield. This one shows you your inflation. So your buying power, all that fun stuff. So here you can see it broke up out of the head and shoulders. We came down to retest the neckline of the head and shoulders. We found support. Now, most likely, we're going to go up and hit this price target that I have here, which means you're going to get more inflation. Back to the news. We have the Dow Jones today, December 15th, 2025. Dow Jones turns choppy near 48,400 as Wall Street eyes delayed jobs data, CPI, and the Fed's 2026 path. I will show you what's going on really. So here's your Dow Jones Industrial Average, trading symbol DIA. We are on the daily time frame. As you can see, we came up, we hit this form of resistance, and we got rejected back here before. Now we're coming up and hitting it. We've hit it. We're sitting on it right now. But if we break down below and we don't find support on it, that means Dow Jones is unfortunately going to go down, just according to the charts. And then if this line is broken, then the Dow Jones will go even lower. But just predictions, only time will tell. We will also show your S&P 500. I love showing this one. Today we broke down. I said do not break this support line. Well, you broke that support line. Now what the S&P 500 has to do is come up, retest this in an ideal situation, and then get rejected, and then it will go lower. And you can see these blue lines are far apart because this is a free fall here in the chart. Now, back to more news. Now, before I talk about this article, we said last week that I was going to talk more about the treasury bill side of things, the trading part that I keep talking to you guys about. So we'll go into how banks and the Fed get their T-bills. So first stop is the U.S. Treasury. The U.S. Treasury creates these bills and sells them to the big banks. We'll use Chase in this example. Chase will buy the T-bills from the U.S. Treasury. Now you might be wondering, with what money? Well, I'm glad you asked. It's the money that's in your bank account. They have permission to use all the money that's in your bank account to go buy those treasury bills. Let me correct myself. Not all of the money, just pools of it. They still need to leave enough in there so if you go out there and withdraw money, there's money in there for you to withdraw. But if it's a larger amount, most of it's not really in there. They use it to buy T-bills. And then after the big bank, which we chose as Chase, has the T-bills, the Fed can now buy the T-bills. So the Fed gets the T-bills from the banks, big banks, and purchases them. Now, with what money, Gordo? Well, I'm glad you asked. That's the only time where the Fed prints the money and sends the printed money into the checking account of Chase Bank. So that's the only time the Fed can go burr in most news articles. And that is how Treasury bills just get passed along the line and the Fed fills its reserves and Chase Bank uses your money to buy the T-bills and U.S. Treasury creating bonds. We'll go over more stuff Wednesday. But this news article, U.S. Economic Calendar today, December 15th, 2025, Empire State Manufacturing, Housing Index, Fed Speaker Williams, and Treasury bill auctions. So it's a lot. Just housing, Treasury bills. That's all what you really need to worry about in this article. And let's go look at the chart. So here you go. Here's your housing chart. This is the housing market on the daily time frame. And you can see we're in a pattern right now. So if we break up out of this pattern, more house buying / building. And then if we break down, less building, less buying, depression. We're gonna all cry now. TLT market. So with the expectation of yields falling, the bond market should go up. But if the bond market goes down, yields go up, which means the Fed's going to have to hike those rates a little bit, like what we talked about earlier. Here you have the head and shoulders pattern on TLT. Let me change this to a line chart so you can see it much better. And we're still saying we're going to go down to this bottom over here of roughly 85.60. And that is it. So what we went over today was how are Treasury bills passed along? How does Fed get its hands on the Treasury bills? How does Chase get its hands on the bonds from the Treasury bills? What form of payment do they use? And predictions, not certainties, of what might happen coming up in the next few weeks. And I will see you guys Wednesday.